Think you need 20% to buy a home in Lancaster, Pennsylvania? You don't. But low down payment options work very differently, and choosing the wrong one can cost you the house. Today, I'm going to walk through the real estate options and how we compare them. Do you really need 20% down to buy a home in Lancaster? The answer is no, and while 20% will help you avoid mortgage insurance, many buyers in Lancaster often purchase homes with 5%, 3%, 3.5% FHA, or even 0% financing options. What matters most is not the down payment, but whether the monthly payment fits comfortably and whether your loan enables you to compete in the market that you're buying in. For example, if there's lots of cash buyers, if you're using an FHA offer, it can be much harder to get an offer accepted. What low down payment options actually exist in Lancaster? Well, there are three main categories that buyers fall into. Number one is the standard low down payment loans. So you've got your conventional 3 to 5%, FHA 3.5%, and these are going to be the most widely accepted types of program. You also have PHFA programs, and these are loans that are backed by the Federal Finance Agency. This enables you to reduce your closing costs by getting a secondary grant towards the loan. You also have bank portfolio products such as the 80/20, which basically gives you 100% financing. These are run by programs like Fulton Bank, and these are still conventional loans. However, they have slightly different rules and income limits. Each option solves a different problem. The main key is matching the loan to your situation and competitiveness of the home that you're pursuing. What is PHFA and what are the Lancaster income limits going into 2026? Well, PHFA programs are designed to help buyers who have solid income but limited savings. The most common program is the Keystone Home Loan, which is often paired with assistance program. This is called the K-FIT. For Lancaster County, the current income limits are going to be approximately, if you're a 1 to 2 person household, they're going to be $106,700. If you're a 3 person household, it's going to be about $122,000. If your household is above these, PHFA is probably not going to be an option for you and will need to go back to the drawing board and look at conventional or other bank programs instead. These types of loans also require you to go and do a home buyer educational course. There's extra documentation because then you have technically two different loans on the same home, but they can work really well if you plan ahead. How do 80/20 or 100% financing programs work, and how are they different from PHFA? Well, this is where a lot of buyers get confused. A 80/20 structure typically means you have an 80% loan, which is the first mortgage, and you have a second loan that covers part or all of the remaining 20%. These two added together enable you to have 100% financing, and with banks like Fulton, you can actually have no mortgage insurance because technically they count the 20% of the secondary loan as your down payment. These are particular bank products and not state programs. They do have different income limits. So I think Fulton's is around 84,000 currently, but do speak to a lender to make sure that you can qualify. These programs are great for people who have great credit, good income, but they want to preserve the cash they need in order to purchase the home. And in the case of Fulton's Bank, have a conventional loan. How does Seller Help reduce your cash you need to buy? So Seller Help, also called seller concessions, allow the seller to contribute towards your closing costs. In Lancaster, this is extremely common and can reduce your out-of-pocket expense by thousands of dollars. So instead of bringing that money in cash, it's built into the transaction already. Seller Help pairs very well with PHFA, FHA, and low conventional loans, as it basically means you can almost close on a home for zero money. I had a couple of clients close for less than $5,000 last year. However, do bear in mind that the more Seller Help you ask for, the less competitive your offer is going to be. And speaking of being less competitive, are low down payment options less competitive in Lancaster? The honest answer is sometimes, and this is where you just have to be open with the person you're dealing with. A low down payment can appear less attractive because it basically makes it look like you don't have the cash to close, or that you're maybe not as trustworthy a buyer as somebody else. If you've got someone who's doing a 20% down conventional, they're doing a large deposit, this signals that they are able to afford the home and that they're truly committed. If you're doing a smaller deposit, maybe you need the PHFA or you're asking for a lot of seller help, this can make your offer A, look less attractive because the seller's going to net less money, but also it just signals that you don't quite have enough cash should anything go wrong. That said, a low down payment does not mean a weak offer. If you're doing favorable terms, such as a flexible closing, you're doing a decent earnest money deposit size, and you're doing minimal inspections, you can easily beat out other offers that have a higher down payment. The key to being competitive is to use strong local lenders, setting realistic timelines when settlements. One of the most annoying things when you're an agent is when someone says they're going to close in 30 days, they have to do the additional paperwork for PHFA, and it ends up getting delayed to 60 days. So nobody wants that. Be upfront with your seller if you're a buyer, and basically just don't mess anyone around. Is buying with a low down payment still smart right now? For many buyers, the answer is yes. Buying sooner means you can lock in your housing costs, you can start building equity earlier, you're going to avoid future rent increases, and basically you can get into the market before prices start going crazy again. The key is not forcing the cheapest loan, but it's choosing the right loan option for you. If you have more money to put down, you might be better off doing a 5 or a 20% down conventional loan because your overall monthly payment is probably going to be lower. Now that we've covered low down payment loans, if you're interested in learning a little bit more about the pre-approval process, check out this video here. And if you want to see how much you need closing cost wise, then click this video here.